We must refuse to let a few dead eggs get in the way of our lives and dreams.
The shareholders blamed the bank's late managing director, Abdul Malek Jan Mohammed, whose actions they term as an unforgivable betrayal.
This was a conspiracy that was engineered to try to blindside the entire board.
The whole issue of Imperial Bank and my wife going to Thailand, this is a paid service.
Perhaps the person most surprised by the death was himself. The 14-year heist he had undertaken had been abruptly ended by heart attack, but silently, all the people that owed him a favor were glad that he was dead as Imperial Bank was. Imperial Bank opened its doors in 1993. Its logo, a prominent purple crown sitting on the bank's name like a crown on a monarch, told the story of this young bank and its founder, Abdul Malek Jan Mohammed. But by the time the bank was placed under receivership in October 2015, investors and depositors had lost 39 billion shillings. Abdul Malek Jan Mohammed owned 12.5% of the bank. It was, however, his hands-on approach in the daily running that enabled him to run the bank like his personal purse. He was born in 1959 in Karachi, India, but his parents moved to Mombasa shortly afterwards. He had training in finance and had considerable training in banking. He was a quiet man, but a manipulative leader. Abdul Malek knew people could be controlled in the easiest way, using money. Everyone who worked for him directly earned a healthy salary, and if he liked them more, gave them random cash gifts. Everyone from the janitor at the toilets to the CFO respected and feared him in equal measure. He was in the heart of every communication at the bank. And although it seemed like everyone made decisions, it was clear that he was the puppeteer behind the strings. On 5th April 2012, someone sent an anonymous email to the Central Bank of Kenya and copied it to the National Police, the Ethics and Anti-Corruption Commission, the Judiciary, the Financial Post, Royal Media Services, and about 10 others. The subject line was Imperial Bank Frauds and Scandals. It is from the expose that followed that the following can be revealed. Earlier in his career, had met another Indian family that was in the business of processing and exporting fish. Business had made the two families to become great acquaintances, and it would obviously follow that the fish company would open its trading account in Abdul Malek's Imperial Bank. The fish processing company was known as W.E. Taili. Its head office was located in Muthaiga, Nairobi, while its processing plant was around Lake Victoria. To the normal eye, an international fish processing company moving large sums of money was normal. But that was the smokescreen that Abdul Malek needed. For starters, W.E. Taili had 73 accounts, and these accounts had over 30,000 transactions between 2006 and 2015. That meant that there was an average of 10 transactions per day, moving up to 100 million shillings per day. A report by the London-based forensic audit firm FTI that was submitted to the CBK Governor Patrick Njoroge on February 9th of 2016 found that all payments that WET accounts received besides the loans and overdrafts were from countries that US State Department had listed as epicenters of organized crime, including tax evasion, human trafficking, narcotics trade, and money laundering. Years earlier, W.E. had featured in another bank scandal, the Charterhouse Bank, with the same allegations of money laundering. It would be established later that Abdul Malek's Imperial Bank was running an underground banking system using W.E. This means that all the 73 Tiley accounts were for hire by anyone who needed to clean dirty money: tax evaders, human traffickers, narcotics traders, and politicians' loot. Ordinarily, in a legit bank, such a scheme would be impossible to pull off. First, every bank has a policy of knowing its clients, meaning that every account that is opened has to have a face behind it. Second, internal auditors would flag such a transaction immediately. For instance, W.E. Tiley loan accounts were 20 times more than its deposit accounts, and the loans were not performing. That is, they were not being paid back. Third, the external auditors would immediately notice the hole in the books. This would in turn be notified to the CBK, who are the regulators of banks, and an action would have been taken immediately. But Abdul Malek Jan Mohammed, or AJ as he was fondly referred to, had this schemed to the book. He had his CFO and his bank's head of credit and head of treasury in his pockets. They were well paid, both in cash and in kind, and had learned to trust AJ rather than ask questions. They in turn facilitated the creation of the fake accounts. AJ always used handwritten notes instead of emails or SMSs. He did not want to leave a trail. Every once in a while, handwritten chits would appear on the CFO's desk asking for money to be transferred to particular W.E. Tiley's accounts. Naeem Shah, as head of credit, would move the money. James Kaburu, as the CFO, would be the guy to make the books balance. Using the accounting software FlexCube, Kaburu tweaked and played with the numbers. Entries would be hidden by manipulating the accounting software, allowing Abdul Malek to produce 3 different books of accounts. He had the real one showing the correct position with the missing money. The board of directors got one, and CBK, as the regulator, got the third.
The banks also accused the Central Bank of Kenya of failing to act when a whistleblower first raised the alarm in the bank in 2012.
And we were consistently over the years presented with reports.
Now that he had covered his tracks internally, it was time to deal with the external watchers. How did Abdul Malek Jan Mohammed deal with the external auditors from the globally acclaimed accounting firm PKF? And how could he keep the industry regulator, the Central Bank of Kenya, well tamed for over 15 years? The answer was simple. He knew every man has a price, and if he dangled the carrot close enough, the victim would bite the bait. The CEO of PKF, one Atul P. K. Shah, was a co-director in a company that had been given an unauthorized loan of 263 million shillings by Imperial Bank. The loan was not performing. Also, one of the partners at PKF in charge of handling Imperial Bank's audit, Rajan Shah, had a loan of 3 million given to him in 2006, which he never repaid. Abdul Malek, again being a sly banker and an investor in favors, kept a record of those who owed him favors. This is what that kept the auditing firm churning out clean bills of health for 14 years.
And it was
Did you
paid.
hear what he asked?
Yes.
He said, or rather he alleged, that in certain proceedings, the former owner of Imperial Bank alleged that he paid for an expensive holiday for your family. When you learned of it, you cut short the holiday, came back and collapsed the bank.
In a rather cleverly hidden folder in his Google Drive, Abdul Malek kept a list of special loans. One sheet within the list was clearly marked CBK loans. He didn't keep the names, just what looked like codes. He was paying off people within the central bank by giving them money when they needed it, but with strings attached. One of the loans was at 1.2 billion shillings given to the company renovating the CBK then. Your guess is as good as mine. The company that got the loan was a front for the beneficiaries behind the walls in the building situated in Haile Selassie Avenue. An email exchange retrieved by the investigators showed one Simeon K. Rono, an official at the central bank, reminding Naeem Shah, the head of credit, an oath he made with the managing director, Abdul Malek. The email read, "Bro, we agreed with Mzee sometimes in 2004 that my children shall never lack school fees as long as his bank was in operation. This was more or less an oath between two friends. So, tuma kitu. If money was flowing their way, they were his to control." Another high-profile beneficiary of AJ's generosity was Professor Njuguna Ndungu. He was the man charged with regulating the market and rooting out rogue bankers like Abdul Malek. He was, however, compromised. Documents produced in court showed that the professor's wife received gifts from Abdul Malek, fully paid holidays and access to credit cards, among other things. Over the course of many years, and unbeknown to the bank's board of directors, the central bank officials deliberately flouted, breached, and acted in disregard of the law in relation to the supervisory process. But if all else failed, Abdul Malek had the backing of powerful politicians whom he was either funding or helping to launder their money. The biggest claim to this evidence was that Abdul Malek had 8 valid passports in his name. 7 of them were ordinary passport in the banker's name with slight name changes. The 8th one was a diplomatic passport, a red passport only meant to be used by top government officials. He also had couplets reserved for Government of Kenya officials, the GK plates. The simple reason as to why he had these privileges from the system was that he could easily make available vast amounts of money. With his access to billions, it was possible for CBK staff to mop up significant amounts of foreign currency, particularly the USD and the pound. With supply cut off, the demand would rise and the players would smartly play the forex market, making big margins within a night.